Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's video. As always, I'm going to recap the events of today and go over the next day analysis. So with that said, let's go ahead and jump right into it. Now, I'm not going to focus on the Bollingers as much today, but we did test a very important level and actually closed essentially right at that level. And if you watched Sunday's video, I did talk about this, but this is the 10-day moving average slash the 10 MA. And with today's session, we essentially rejected the 5-day moving average, retested the 10-day moving average. We didn't get a full retest of that level. We tested it a little bit. The low of today was the 772.51, and the 10-day moving average is at that 772.59. So basically right at that level. We closed at the 772.67, so right at that range. Now on the daily time frame, I want you to look at the volume still. With this descending volume, we're now starting to get selling from that, which is a pretty common trait when you start seeing the buyers essentially starting to slow down. And we're seeing the ADL starting to heavily drop from essentially what was the all-time high. Now I know we had the all-time high 3 sessions ago, but we've still been seeing descending volume and descending money volume essentially since then. So as much as that was the all-time high, a lot of the power was really in this big spike right there about a week and a half ago. Now with that said, I want to jump to the 15-minute time frame so we can kind of look at the session today. And I want to look at the drawings. Now we did break through this resistance, which again, resistance always turns into support. Well, I don't want to say always. Most of the time it does. Unless your stock is just crashing or something. We started to retest that support that I talked about in yesterday's video and my posts that I always do. The 775.83 and the 774.99. You can see the market starts to hang up around that range, and there's probably a head and shoulders at that. I didn't get a trade this session today, but I did observe kind of what was going on, and yes, there was that head and shoulders. May not be the most clear, but let me go ahead and change the template here. There we go. There's the left shoulder, right shoulder, or excuse me, left shoulder, the head, and the right shoulder. All right, from that right shoulder, we got the breakdown, which broke us through both of those support ranges. And now we're starting to head downward towards the next support range, which is that 771.52. So that's exactly what was occurring today. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now from this, I want to look at the hourly time frame, maybe even perhaps the 4-hour time frame, and we can kind of determine what's going to happen with tomorrow's session. Now for now, I'm going to delete some of these prior support slash resistances as we can start focusing to the downside. I do want to set up a couple resistance ranges here that are going to be important if we start heading back upward, which is the 778.23. So let me get this updated. And then essentially that all-time high, which is the 779.37. But currently, we are stuck very well within this consolidation channel. And going to the 4-hour time frame, this kind of really shows you the scope of what's taking place. We see how we've broken from this buying channel multiple times now. We've tried to extend it, especially when we had that push upward, and we have not been able to see that follow through. So now we're trading, very well within this consolidation channel. Now within this consolidation channel, we should be expecting to pull to the bottom of this channel. Okay, now I actually want to look on the daily time frame here for a second. And the 20-day moving average is at that 757.73, which very likely is going to coincide close to the bottom of this channel within a few sessions. Okay, the bottom of this channel is around that 7. It's hard to get the exact number because this line does not want to show me. It's around that 767. Okay, so with the 20-day moving average on the daily time frame being at that 757 and some change, that'll be pulling up each and every session closer to us. So we should be starting to expect a push into this range. Now we can break down into this consolidation channel a little further, which would basically extend the bottom of that channel. I don't think that's unreasonable at all. We've been testing the top of this channel quite a bit. We did build some on the bottom of this channel, but you can see this basically just a massive escalator to the upside, or elevator, however you want to describe it, more of an elevator. And now we need to start retesting some of the downside. Okay. Um, with that said, we don't have any major earnings this week that are going to really rally the market. So I'm not expecting anything to really push the market upward from this point too much. Now, for the data sets tomorrow, we don't have anything, very remarkable. We have let's see, the housing starts and industrial production. Those aren't really going to make, make or break the market too much. So from retesting the 5-day moving average, the 10-day moving average, if we continue breaking down through this 10-day moving average, then our expectations should be to start pushing into these supports, which again are going to be that 771.52, the 770.20, and the 768.04. If we break through all of those ranges, then we do have the bottom of this channel. I'm trying to find the exact range on it, but it's kind of a pain. It's basically around that 767.47, or 45, excuse me. So that's what I would be looking for. I don't expect this all to break down tomorrow. Perhaps over the next 2 sessions, we should be expecting that to occur. Now, with that said, even though this isn't going over exactly tomorrow's session, this is going over more so Wednesday. But on Wednesday, we have the FOMC meeting minutes. So unless those are going to be very, very dovish, which I don't think they will, I think they'll be fairly mixed in terms of the language coming from them, then we should very, very likely be seeing some downward price action. We don't really have a lot of data this week to support any major shifts in the CME expectations of the rate hikes and the rate pauses. We don't have any major earnings, and so all we have below us really is support to retest. So that's what I'm expecting. I'm expecting some downside at this point. I think that a lot of different signals are starting to tell us that's starting to occur. And within the VVIX, which is, not exactly the same as the VIX, but you can think of it sort of the same, it's starting to wake up again. Okay, it did pull all the way from this 110 down to, get the exact number, 87.20. So basically, a $23 downside within the volatility. And now we're starting to spike back up again. We're at the 93.92, which is a whole $10 from that downside. So we're starting to have the volatility wake up again. Now, within the grand scheme of things, volatility is still at a fairly low range, and I do want to actually extend this outward a little bit, just because it is easier to see our ranges here. And what's important is that this is, I have this designed as like a stoplight or, a traffic signal. If you enter the red, that means there's a lot of selling taking place. If you're in the yellow, there can be buying taking place, there can be selling taking place, but it's kind of that cautionary in-between area. If you're in the green, then you're just, go, go, go. There's a ton of buying going on. Okay, well, we've pulled from the green area back into that cautionary yellow. Okay, and if we continue seeing this push upward, we're going to be right in that red area again. So is it unreasonable to look at the SPY and say, Okay. Is it possible we start testing some of these lower supports? I think absolutely. We have the 20-day moving average at that 757.73. Again, that will be pulling up towards that 760 range. From that 20-day moving average retest, which could possibly happen this week. I'm not going to, crystal ball that just yet, but very likely. I think that that's on the table at this point. From that level, it's going to be really important to see if we have an upward bounce or if we start pulling downward at that point. Okay. Now, the last thing I do want to close this video out on is that the yen has still been, you know, really struggling to maintain its strength. Okay. And because of that, it's extremely likely that this month we see the Bank of Japan hike their interest rates. If they don't start hiking their interest rates, the yen is just going to disintegrate. And remember, this is the USD JPY, which is an inverse essentially of what the yen is actually showing. So the higher it is, the weaker the yen is. The lower this is, the stronger the yen is. Well, looking on the weekly time frame, we're at all-time highs essentially. We're very, very close to all-time highs. We were at the 163, almost 164 per $1, but you know, they did pump, hundreds of billions of dollars of, USD into buying the yen to try to strengthen it, and that has done nothing at this point. So it's very likely we're going to see not only a hike within the interest rates for the yen, but we're very, very likely getting to the point where the Bank of Japan needs to start selling securities. Okay, this happens every year around this time. I've been kind of talking about this for the last month and a half, 2 months now, that we really need to get ready during the season because the Bank of Japan generally starts heavily selling equities during this time of year. Doesn't always happen on the exact same date, but it usually starts happening between the months of August through October. And we're still within that time period. We're still seeing the yen, um, continue to struggle at this point. So I think with that, we need to be very cautious, especially when the SPY is very close to all-time highs. I mean, we're only $7 off, so we can basically call it that all-time high area. Um, that's exactly what they're trying to target because they're going to get far more money from the market than what they would after, if they're trying to do this during a sell-off, right? If the SPY was only at 700 compared to almost 800, that's almost $90 a share extra that they're getting in terms of the entire market throughout selling all their different equities. So it matters quite a bit. I do think it's coming, and it's something we all need to be very aware of. We're seeing tapering buying in here. We're seeing our ADL pulling down. We just broke through the 5-day moving average. We left the upper Bollinger. There's a lot of different signals telling us that selling is very likely to start picking up soon. Not that I'm entirely bearish just yet. You all know that I'm bearish over the next couple of months. I've made that very clear. But I do think that, that bearishness is getting ready to start kicking in soon. But I do want to see this 20-day moving average retested first before I really start, getting on the fence and saying, oh, yes, the market's going to turn bearish at this point. So, with that said, that's today's recap and analysis. I hope you all enjoyed. Thank you all so much for watching, and I will talk to you in tomorrow's video. Take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.